Hello, everyone, and welcome to another episode of SubQuery's Investor Series. Today, I'm joined by Reda from IPC, IconPlus Capital. Reda is one of our excellent investors. I've been working very closely with Reda, and I had the joy of meeting Reda for the first time face-to-face just a couple of weeks ago. So it's good to do this interview after that. Welcome.
Awesome. Thanks, James. Thanks for the awesome introduction. My name is Reda Sema, and I'm the Managing Director of IconPlus Capital, otherwise known as IPC. By background, I'm an economist, and I come from corporate experience where I've spent 20 years working for a large company, taking care of multiple responsibilities around EMEA and different parts of the world. In IPC, we're a mid-size venture capital, 15 staff, and we try to have a very hands-on approach and work really closely with our portfolio companies, helping them, giving them bandwidth, capacity, supporting them as much as possible. We've managed roughly just over $60 million worth of assets, and we do have a multi-strategy investment where typically we have a strategy of capital investments, quite given, as well as liquidity provision to maximize yield and bootstrap the project that we invest in. And finally, node operation as well to stabilize some of the networks we invest in and support them as well.
Excellent. Now, Reda, many investors that we have talk about a hands-on approach. It's kind of thrown around very commonly in the space by investors. But I think from my perspective, IPC really embodies this hands-on approach. What does it mean to you, and why do you think it's so important?
Sure thing. And I'm chuffed to hear that, James. We would like to think of ourselves not just capital investors, but we are partners along the way throughout the whole process, right? So we invest capital, but at the same time, we work hand in hand with our portfolio companies to really help them to achieve their objectives and targets. What we do before we invest, we need to believe in the project. We need to believe in the journey, because alongside investing just money, we invest bandwidth and capacity. So we need to make sure that we ourselves have enough bandwidth and capacity to be able to support those projects. We understand very well that those startups that we invest in, sometimes they have outlandish objectives. Sometimes they have very big visions, right? And particularly at the beginning, when they need to scale, they need to staff, they're doing the typical startup things. Everybody's doing everything, and they're trying obviously to cover all boxes. They need as much help as possible, and we really try to support that. We support with the business, we support with the marketing, we support with PR, but at the same time, I always say it, we like to not limit ourselves to any of those boxes, because what we say is we are here, we have staff, we have capacity that we've allocated to you, as well as the money that we've given you right on day one. And we would like to work alongside you to help you achieve those targets. And it's paramount. And once the business stands on its feet, once people scale, once the development team, the marketing team, the BD team, the HR, etc., kind of find their feet, things become a little bit easier. But right at the beginning, it is paramount. And I would like to encourage all other investors to do just the same.
Yeah, no wonder you're scaling to 15 staff members, right? There's a lot of work involved with each of your portfolio companies, and that pays off, obviously. When you decide or when you assess a new company for potential investment, what are you looking for? What are the key things that you're looking for that allow you to make a decision to invest your time and your effort into a portfolio company?
That's a very good question, James. And we look at a number of things, and we try to be incredibly prudent in our investments. And this is not just because we're giving away money and we invest in money, but at the same time, we're putting our name against it. We're giving away our time, our bandwidth that we cherish so much. And even though we got to a scale now, 15 individuals working in the team, we are getting to a stage where we need to scale even on that to continue to provide that same level of support going forward to our portfolio companies. So we try to do very detailed, high-level due diligence on any of our investments. There are a number of things that we look at. Kind of broadly speaking, we look at the ecosystem, for example. Is that an ecosystem that we like? There are certain ecosystems, obviously, that we rate highly in the space, talking about Polkadot and the Substrate ecosystem, for example. Another example is Avalanche, for example. Why? Because the way they nurture projects, the community within that ecosystem, the rate of build, the rate of growth, the TVL, and many other things. We look at the teams and the individuals and the experience they bring to the table. We look at, where did they work before, what kind of experience they have, the kind of vision, what kind of personalities they have, right? Are they collaborative? We look at them from, are they protocol builders? Are they company builders? And we're after the company builders as opposed to just protocol builders. There are multiple things to be successful. And it doesn't stop just at building something from a protocol stand level. And that's where we see a lot of people getting it wrong. We look at the vision, for example, of the founders. We look at the actual products they bring into the table. Is it innovative enough? Is it scalable? Is it needed? Right? Has it been done before? How needed was it? How successful were they? And that kind of stuff. We have something that we call, can we get behind it? It simply is it a project that we can get behind? Can we put our name behind it? Can we support it? Can we, proud supporters, proud partners, proud investors, can we kind of, just go and, be open about it publicly? That kind of rates really highly for us as well, particularly in this space, because it was at its infancy stage and we've seen quite a lot of volatility, right? So we were really careful in terms of the projects that we wanted to collaborate with and have our names alongside them. We look at, do they have a foundation? Do they have supports to people working around the project? Is there any kind of long-term supports that will be in place, obviously, to ensure that this project is going to be successful today, tomorrow, and in 5 years' time? We look at them from a regulatory standpoint. Are they regulatory compliant? Right? Are we going to come across some kind of regulatory hurdles down the road? Is that going to kind of hinder our investment and what have you? And we look at how the team is being set up. So we take all of those, we give them different ratings, different weights as well. And that helps us to kind of really understand whether this is something for us or not. As well as that is we try to speak to the team, meet with the team, whether in person or not, online. With COVID, it was quite difficult to do it in person for the majority of it. We try to build a relationship and really understand, is this a team that we can work with? Is this a team that we can relate to, etc.?
Yeah, it's a huge list you have there, right? And it must mean you have quite in-depth due diligence process. But the outcome at the end is teams that you can get behind. Is there any sectors or kind of industry verticals that you often find fit your parameters or fit your matrix quite well?
Yes, we have certain sweet spots, but the list is quite extensive. We don't want to miss out. There is also that. There is the fear of missing out that kicks in with VCs as well. We try to be creative. We try to be innovative in terms of, if there is any kind of new thing that's going to be coming out of there, we want to be one of the first ones to be part of that and to not completely miss out and join the second wave. But we're looking at L1 kind of platforms. We're looking at infrastructure type projects. So SubQuery falls in that kind of bracket. We look at anything to do with DeFi, particularly if it's innovative. If it's not an exact kind of copy protocol or repeat of something that's been done a number of times before. We invested lately in quite a few NFT marketplaces and NFT related projects, geotagging NFT projects, and also a DEX.
So it's kind of a constant battle between picking your favorite sweet spots, but also what's the term? Differentiating or diversifying your portfolio to really have some put some fun plays into some new industries or new sectors that could be interesting and could come through. You said something really, really nice. I really quite like it. I'm going to steal from you, sorry, Reda, which is we invest in people or companies, but not protocols. And I think that really resonates to me because, we've been going through a scaling process at SubQuery. We've grown from when we first started talking, it was like 7 or 8 people to now being 30, 40, soon to be 50, hopefully, people. So we've gone through a huge size and growth phase, and those problems that you talk about of building a company rather than just a protocol, they're very real. How does your experience from the commercial world or from the previous corporate world kind of prepare you for that, or prepare you to make those kind of decisions around, is this team going to scale?
Oh, hugely. I think our VC is majorly impacted by the corporate way of doing things. We're trying to take
Mm,
the best of both worlds. We're trying to take the organization, the structure, right, the building for tomorrow from the the traditional corporate kind of system, given our backgrounds, given our experience, and given this is where we spent most of our working life, right. But at the same time, we're trying to bring in the nimbleness of a startup, of a smaller team, to be able, so there are no boundaries, no limitations around what you could do. And more often than not, you find individuals taking care of multiple tasks across the team, right? And it doesn't matter who you are in the team, if something that needs to be done and you have a bit of capacity, we'll call up on that for you to chip in.
mm,
So we're trying to really make the most out of that to remain nimble, to remain competitive. The market is incredibly competitive out there. More often than not, we don't finish the to-do list for the day, you know. And I've mentioned earlier in the call that, we need to scale now. We get into a kind of critical mass of, we need to scale to continue that same level of supports that we've been doing so far over the past few years. Talking about teams and how we look at them, we look at experienced individuals, right? And we look at individuals with a bit of fire in their belly. And more often than not, you only see that once you speak to them and once you dig into their past as well, right? You see what they've done before, how successful they've been at it. And you speak to them, build a relationship. You get to understand a little bit more about those individuals. For example, James, I know you like to do adventurous stuff, and I like I know you do trekking for days on days, right? Which gives us a lot of insights and information about the individual, right? The grit they have, the desire, when they set out to do something, they complete the task, they get it done, right? And it gives us a great level of comfort. But at the same time, we want to be 100% compliant. We want our portfolio investments to be 100% compliant. We want to, when we go to bed, we go to sleep, we want to know that this company is going to be successful tomorrow. They're not going to have some legal regulatory issues down the road that's going to make sure that they're going to go down under. So how do you do that? Is you need to not just build a protocol or put it out there. You need to be able to build a team, have a legal person, have a HR person, right? Be fully aware of obviously the countries that you operate within, the contracts that you've signed, and that kind of things. And you only achieve that when you have somewhat level of experience in building teams as opposed to purely
mm.
building protocols. Another thing that we have is we don't invest in undoxed individuals, right?
Yeah.
We keep it above board, and we only invest in companies where we know exactly who the founders are, who are their main staff individuals, right? Who's signing the contract, where the legal entity is based, right? We have that basic level of information that gives us, on the other hand, great level of support in investing in the company, but at the same time partnering with them. And going back to what I said, putting our name again, can we get behind it, or putting our name against it?
It's hard to do that when you don't know who you're putting your name behind, right?
Exactly.
Do you think there's still too many cowboys in this industry?
Oh, there is plenty. There is plenty.
Mm,
So we're still early in the grand scheme of things. I think we go in from the very early phase to kind of the mid phase, the adoption phase.
yeah.
And with every opportunity, there will be good people, but there will be a ton of cowboys run into it, right? And we have to be incredibly safe and prudent in terms of our investments. And we see it day in, day out, and that's what I would like to say. From this platform, that's what I would like to say to everybody: is to be incredibly careful and incredibly diligent on their investments, on projects they would like to invest their time or money or resources in whatever form. Just as a quick example, when we've met at the summit a couple of weeks ago, probably met with about 48, 50 something companies. We invested in one out of 50, let's call it 50 companies. We invested in one. And that goes to say, I mean, yes, some of them are absolutely legit companies. Quite a lot of them are legit companies, good ideas, etc. But just when we put them through our due diligence process, our rating process, right, they didn't mark high enough for us to invest in them. right? But some of them didn't quite make sense. Some of them, the individuals didn't make sense. The individuals didn't want to share names, and
Yeah.
some red flags along the way that when we kind of put it down on a piece of paper, it just did not add up, and therefore did not fit the criteria for us to invest in as a VC.
Yeah, no, that's a rare thing. We commonly joke about VCs and crypto giving away money without even knowing who you're talking to, or without any kind of DD. But it's refreshing to hear the complete opposite. I'm curious to know your personal background, Reda. You come from economics in a corporate world, right? And how'd you jump over doing investment in mostly Web3 and decentralized technologies?
Yeah, I've always been good with numbers. Always, there's always been maths, always been my forte growing up, and I did economics for my degree and education, and then I worked in the oil and gas sector. But throughout working, I've always invested in funds, I've always invested in stocks, I've always invested in crypto. We started roughly personally, and I started in 2016, but pretty much most of our co-founders started around about the same time frame. Some started a little bit earlier than others. For me personally, talking about myself, it was the smart contract that really drew me into the space. Right, it was okay. Now we have something that we could do things with, right? That we could build things around, that could generally make our life, our day-to-day life, whether buying a house, whether automating something, a little bit easier, a little bit more straightforward, right? And we don't need to rely on third-party individuals throughout the process. So that was really the thing that attracted me. So got into the space within 2016. So I've gone through the BTC craze in 2017 as well. That was enjoyable. Then we went through obviously the bear market, and we've learned quite a lot about that from this market dynamic standpoint. We invested in the DeFi craze in 2018, 2019. And then, we didn't invest in any kind of, I would say, NFTs, from the crypto kitties and the punks, and we didn't do that ourselves, but we invested in NFT marketplaces because we saw obviously there is a need for that. There's a whole market for that. There's a lot more demand coming to that side of the market, and it's only going to grow going forward. And that led obviously to multiple other things as well, and a heap of other investments that we've made, as well as now we're investing in GameFi and games that are incorporating NFTs into them. And it's how exciting is that? Is where we're looking into our portfolio companies, and we've got NFT marketplaces that we could introduce them to the GameFi, and we could introduce them to the gaming studio that we invest in as well to SubQuery from an indexing and querying standpoint. Now, just looking at our portfolio companies, there is a ton of cross collaborations, cross partnerships that we could help make happen. It's a fabulous place to be in.
And that's where the real value begins, right? That's where the symbiosis between all your portfolio companies really takes off.
Absolutely.
Yeah.
Absolutely.
So my last question I always ask to everyone that joins, sorry, is what bit of advice would you like to give someone thinking about jumping from, let's say, the oil and gas industry into Web3 or blockchain? What bit of advice would you give them when they're on the cusp of doing so?
Oh, sure. I would say if you really kind of considering it seriously, and if you feel this is where you want to be, that falls within your aspirations from a career standpoint, from an investment standpoint, whatever that might be, do it. Life is too short for regrets, and down the road, when you look back at it, maybe you're going to regret not doing it. My advice would be to do extensive research before you do anything. Read up about what you want to do, what you want to achieve, right? How is it achievable? What time frames do you have for yourself? Financially, can you do it? From an educational standpoint, can you learn about it? Can you pick it up? Can you run with it? Is that something that you're going to be enjoying going forward? Do a lot of research. Don't rush into anything. Whether it's a trade, whether it's a role, whether it's a change. We are still early. There are always going to be opportunities. The market's always going to come back to you. Every single time you rush, you're going to regret it. It's quite simple as that. I did it a million times, James, in my investments. Every single time we decided we're going to rush into something, we ended up biting ourselves and totally regretting it, because the market comes back, a better opportunity presents itself elsewhere, or something along those lines. So I've learned to really take a back seat, do a ton of research, and don't rush. Just wait for that perfect opportunity where I feel comfortable. Because a lot of the time, if you make a decision, you wake up next day feeling a little bit in doubt, typically that tends to be the wrong decision. Because when you make a good decision, you wake up next day and you know that you've made the right decision. You just have that strong, pillar inside you that's a feeling that tells you you've made the right call here. And this market is very flat from a structural standpoint, so it's not hierarchical in comparison to traditional market. That's very important to understand. It's very easy now to approach individuals on social platforms, whether it's founders, CEOs, VCs, devs, famous devs, etc. Super easy to reach out to them and ask questions, ask for help, opinions, whatever that might be. My advice as well on that particular point, I would like to say, don't just be the time grabber. Don't be the one that just asks questions, right? Try to be a little bit more smart about it. If you want to ask somebody of something of somebody, think about where you're bringing value, right? Thinking about a way of helping. I would like to help with this, right? Whilst we're at it, can I ask you this, right? It goes a long way. People pay more attention to it, because you're not just the one asking for somebody's time all the time, but you're trying to bring something to the table, whether it's support community, whether maybe a feedback, whether it's a suggestion, whatever that might be. Nothing is too small. But just come with something to share as well and contribute with. At the same time, utilize that as a platform to ask the questions you want. And I would say it's a great dynamic market that never goes to sleep. If somebody's hungry, somebody's young, somebody wants a challenge, it's a great place. And we complain about it because it doesn't go to sleep, and we stay up with it all the time. But at the same time, would we do it differently? No, I've moved from traditional kind of markets to this, because I've enjoyed it so much.
It's a lot more rewarding.
Oh, totally. Totally.
Allows you to wake up every morning and kind of get excited about the day. But you make a good point around doing your research. And I imagine that the same research that you do every day when you're assessing potential companies to invest in is a similar type of research that someone should do when they're thinking about jumping on board with someone else, or joining another team, or applying for that job. That same research would make a world of difference. So yeah, thanks, Reda. You're clearly a research and detail-orientated guy, but that's unsurprising from your background. It was a pleasure talking to you again, and thanks for giving up your valuable time to give us some insights.
Oh, my pleasure, James. It's been a pleasure to be here, and fantastic to be part of the journey of SubQuery. We're really chuffed to be one of the partners of SubQuery, and we are loving every part of the journey.
It's getting really exciting, especially now. Things are starting to go faster and faster. So let's see where we go. Thanks, Reda. Thank you very much for joining.
Pleasure. Thank you.